Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's take a look on the gold market. Situation here stands a bit more interesting than on the euro currency, because here we have very intriguing moment that was formed here. So take a look. Formally, market has completed the grabbers. So if you remember, in our weekly report, our trading plan, we suggested that yes, maybe some upward continuation could happen this week, but mostly it will depend on this on the speed of this action. So and depending on the pace, how fast market will move, we could make more aggressive trading plan, or it will be more dovish trading plan, let's call it in this manner. So the appearing of the grabbers on the beginning of the week, kind of the twister bottoms, let's suggest that maybe we could get a kind of double bottom on the intraday charts. And now take a look what really has happened. Market has spiked up this top, and formally the grabbers are completed. So currently, maybe later something will change, but currently the appearing of the grabbers haven't led market to real breakout and upward acceleration. Only minimum target has been completed, so grabbers lead market to taking out of these recent tops, and market collapsed immediately. So this looks more like the wash and rinse of this top. And it means that currently we can't treat this action as a reversal to the upside and starting of the continuation of the long-term bull trend, but mostly it seems like retracement. So kind of the ABCD action here. So in fact, if you'll take a look at this, you could get Gartner's triple two sell has been formed. Almost. The one exception maybe that's here, as you can see, that's slightly lower bottom than here, so it's not really very good for triple two, because it suggests that this low should be higher above these lows. But anyway, it's kind of the ABCD action has happened, and market has shown the wash and rinse of this top, failure breakout with this trend line and return right back down. So this is bearish sign. So on the 4-hour time frame chart, guys, you can see that our first scenario has done perfect. Market indeed has completed the butterfly, and as we suggested, market has dropped, because we said that will be first challenge for the market, and that will be definitely strong resistance, and be prepared for a downward pullback here, at least to the 30% support, 1280 support area. So as we said, this will be kind of the confidence support around 1280 that we have discussed yesterday, and that indeed has happened. But what to do next? Here we need to keep an eye on two major levels. If you take a look at the hourly chart, take a look. First level that we should keep an eye on is 1286 area, because currently here you could recognize the head and shoulders. It's forming. Here's minor A, B, C, bottom XOP target has been hit. It's almost creates the agreement, 1285, 1286, so very close to each other. And here we need to keep an eye on what will happen here. That's actually, guys, as I call it, a culmination point. So if you have the bearish view on the market, you could think about taking short with the stops slightly above this area or above the top. So it's just $5 per contract. It's not really very significant stop order. I'm not sure definitely that this will work, but at least this point is, as I always explain, why I call it as a culmination point, because it provides best risk-reward ratio. So with that, taking the position here, you guarantee yourself the nearest stop orders or minimal loss with the equal probability of success. So if even you will be wrong, your loss will be minimal compared to any other point where you could take the short position here. So that is the hand shoulders. So depending on this pattern, we will get the direction. So if this hand shoulders will start to work, be prepared for a deeper A, B, C, top, D action to the downside. But that in turn will stand not in agreement with the idea of the double bottom or something of that sort. So breaking this area down below these lows, it will be too significant. And that mostly takes the shape of some kind of the sideways consolidation. That in turn leads us back to the idea of the bearish dynamic pressure. So we suggest that market will drop here to 1272, 1270. This will be too deep, and that will be some signs of the bearish dynamic pressure. So that's the first scenario. If somehow market will break it up and start tending upward, be prepared for the large A, B, C bottom pattern to the upside. Because here, guys, you could recognize a kind of the hand shoulder shape. So left shoulder, head, right shoulder is forming. Yes, of course, we can't call it purely head and shoulders because take a look, it actually stands as a part of the larger pattern. But I'm speaking just on the shape, so what the patterns you could use. Of course, you can also use the target of the double bottom itself that stands significantly higher, but here we have minor, another pattern is A, B, C, bottom, D pattern will be. I would suggest this will be somewhere around inside the confluence. This target will be. So it means that there are two crucial levels that we should keep an eye on. First of all, this one lows. While market stands about, it keeps bullish sentiment, it keeps chance on upward continuation. Second, this top, if market will break it, bullish sentiment will be confirmed, and we should be ready for upward continuation. If market will turn here down, start downward action, that will tend to turn sentiment bearish, as on the daily or as on the intraday chart. So this will be the decisive point on the gold. So depending on these 2 points, you could create your trading plan, what you would do in current circumstances, where you would like to take the positions. So that's actually what we need to keep an eye on today.